All right, well, let's move on and talk about our next company here for investment, and that company is Mattel, the toy maker. I'm sure you've heard of this company. This company, I think, going to give us some numbers, but I think they've dropped a lot recently. The company Mattel, their symbol is MAT. They're in the industry of leisure. I thought there was a toy category, but I guess not. Short is about 6.4% on the float side there. We do have a decent start here. The PE ratio 14.1. This is the last 12 months, well below the industry at 51.9. Price to sales 1.1 versus 2.5. Price to book value also good, 2.4 versus 3.4. And then price to cash flow 9.5 versus 14.3. So all the valuation ratios are lower than the industry average, but there's no PEG ratio, which is important because that's your price earnings divided by growth, tells you how much you're paying for the future growth of the company. Now, unfortunately, over the last year, the earnings were down 16.5% for Mattel, but the industry was down 40.1%. I wonder if that's from the tariffs or what's going on there. Sales did decline by 2.8% for Mattel, but they were up 4% for the industry. The 5-year earnings per share growth estimate for the analysts show that they're looking for a decline of 13.4% per year on the earnings. The industry is about flat at negative 0.1%. They do pay, no, they do not. They used to pay a nice, juicy dividend. I see they cut that dividend. There's no dividend any longer on Mattel. They used to have a nice 4 or 5% dividend, but I think they're really struggling here. So no dividend there. Let's look at the balance sheet here. Current ratio 1.6 versus 2.5. That's okay. Debt to equity 1.2 versus 1.3. That's okay as well. We do see a net profit margin of 8.3 versus 4.2. Return on equity is pretty good, 19.1 versus 15.8. And the free cash flow is $488 million versus $623 million for the industry. Jace, what do you got going forward?
Well, that dividend point, it's actually been years.
Has it really?
Yeah, they cut the dividend back in 2017.
Wow.
Yeah.
See, when you get to my age, it seems like 2017 was just last year.
And it's crazy because in 2016, they were paying 38 cents a quarter. I mean, just based off the current price, that would be about an 8.7% yield. Yeah. They did cut it to 15 cents in 2017, and it looks like then they fully cut it. And when you look at Mattel, I mean, the main brands that you're going to recognize is Barbie and Hot Wheels. And I know my nephew loves Hot Wheels. And actually, my daughter, she likes cars too. So, I mean,
but she doesn't like Barbies, does she?
She likes dolls. Yeah, I mean, she'll
the
be
Barbie
two.
doll.
We haven't gotten her a Barbie yet.
Yeah.
We just got a little play doll. And then
Yeah.
they do have like Fisher Price. It looks like another one. So they have the baby toys as well. Fisher Price is pretty big in that space. So, I mean, it's great brand names. I like what the business does. And I also am intrigued because the return on the stock has just been terrible. And it could be a buying opportunity is why I say that. Current price here, $17.41, 52-week range. I mean, the low, $13.95, and the high, $22.48. Year-to-date, the stock is down 12%. Over the last year, it's down 20%. Last 5 years, you just made no money, down 10% during that time period. And the last 10 years is where things get dicey, down 46% over the last 10 years as the stock was over $30 a share back then.
No, and this is a good example of why not to fall in love with a company.
And actually, you go back more than 10 years. I mean, gosh, this stock was over $45 a share back in like 2013.
Wow.
So definitely some changes to this business. But going forward, this is, I'm going to say, intriguing. You go out to December 2027, estimated earnings per share here, $1.54, gives a target sell price of $25.56. The stock is trading for about 11 times those future earnings. That is interesting. And the thing you look at is Hasbro, their competitor. That stock has just taken off as of late. But a big reason is they have this thing called Magic, which is like a card game. So in my mind, it's a totally different type of toy than what Mattel sells. I don't know, kids' toys, are they just not doing well? I mean, what's going on here is, phones and video games, is that just really taken away from kids' imaginations and playing with these kinds of toys? I don't know.
I think so. And this is just no research behind this, but I do believe that now kids, when they were younger, like 20 years ago, a kid would play with toys to maybe 7, 8 years old, 9 years old. I think now that is cutting sooner. Yep. Maybe it's 6 or 7. So kids don't buy toys when they're 10 years old any longer. They have the cell phones, they have the video games, and I don't have kids that age, and you'll have a few more years before we get that. But that's just my feeling based on what I see from other kids.
Yeah, I mean, it could be, because you could have had. I remember playing with Hot Wheels, I think, until I was,
Yeah.
I wasn't 15 playing with Hot Wheels. I know that, but
That's not saying you're a nerd, right?
I think you're probably like 5, 6, 7, maybe. Like,
I mean, 20 years ago, I think it was even 10.
that was what you do, yeah.
Because you didn't have a phone, you had nothing else, so you'd have toys, and you had the little figures, the
the Batman.
Hot Batman, Power
Batman
Rangers,
was my thing.
all those. You had those.
Yeah.
And, yeah. I mean, I don't see. I'm not around a lot of kids, but I don't see those toys much anymore.
Yeah, you used to play with your like GI Joes, and
Yeah.
and it's kind of shifted away from imagination to again creation of videos.
Yeah. and I just, and again, you'd have to do some research on here. I just don't trust that $1.58 for December 2027. I don't.
I'm at
really.
$1.54, but
Okay.
even that.
Yeah, thinking off a Stock Rover shows $1.58. So,
Yeah.
But yeah, I. What did you finish?
Yeah.
Okay, so what was the target sell price?
Target sell price on this was good, 25.56. I mean, we might have differing opinions. I like it. I think there's some potential here. It might be because I have kids and I'm thinking, maybe. But again, living in that space, I would need to kind of do a little bit more research on the broader population. But to me, I'm like, oh yeah, we just bought some Fisher Price toys. So.
Yeah, and again, I guess you have to understand the business more. But again, you talked about that 10-year return. It's still a negative 40%. I just don't know how they come out of this. They've cut the dividend. Something is going on with this business that is not good. That's
we bought companies before, though, that have had negative 50% returns
Yeah,
over 10 years. And we're
true.
like, wow, this is great value. And again, because you don't need it to go back up 100% to make money.
No.
If it goes up to, even our target sell price of $25 a share, I mean, shoot, that's a good return here of, almost 50%.
Now, if they get some royalties or something from video games or something like that, I'd say, yeah, this could be good. But I just don't know the business well enough. And this is why, again, we talk about spending 10, 20 hours before you invest in the company. You got to understand what their business is, because it could be a dead money for years based on what they got going on. So,
I wish they paid a dividend. If they paid a dividend, I think I'd be more interested.
okay.